All right, guys, very interesting trading today. So here, let me show you something very interesting. And this one 15-minute chart and Bank Nifty, it was running in a sideways market last few days, somewhere like that. That was sideways market, and finally create a new all-time high. So where exactly we entered? So let me show you first. This one swing point, another swing point, and a swing point. So I connected and I finally broke this area and create a new all-time high in a Bank Nifty. Why we was looking for buy? Because price pull back near 200 moving averages, again bounce, again pull back, again bounce, again pull back, and we are expecting that it will bounce from this area. So let me show you exactly where we entered today. So this one uh, 15-minute chart, and this one another 1 minute chart. So where price exactly open? Here I can see this one 9:15 and opening point around 43142. So let me use standard deviation 43152. Am I right? Opening point and the 43142. Sorry, 142. So here I can see once I click outside, automatically detecting the support and resistance line. All right. So first support 43300. 43300. Let me use 43300. Okay. Okay. Let me check it. The VIX 0.8 weeks. This one VIX and opening this 14.08. So here I can see here open. So once I use this candle, so 14.08. So I put here 14.08. So first resistance line 43300. So here let me show you 43300. That was my first resistance line, and the second resistance line, one standard deviation 43459. 43458, 459. Let me use 459. Okay, and the last standard deviation 1.5. That is 43618. 43618. 618 somewhere here. So let's see. So first candle, they form a bullish candle. So what is our rule? Once price form a bullish candle, one bullish candle, so next candle we are looking for buy after giving a pullback. Like price open somewhere here and given little bit pullback, and when again from a bullish candle, so we exactly enter somewhere there. All right, that is our uh, pullback trading strategy. So why we are entering? So you can see when forming a bullish candle, like a bullish candle. So next candle when they are open, after that giving a little bit pullback and again enter. All right. So you can see 90% time it happen. So let me zoom a little bit. Okay. So 90%. So here I can see, and here I can see yesterday first form a bullish candle, so that was pullback till you can see exactly we enter here, the price goes up from this area, all right, on a specific level. So next form a bearish candle, next candle that is a pullback, we exactly enter, price drop, all right. So here I can see price from a pullback, so not able to break again from uh, this is a breakout trading strategy. Let me show you today's entry point. So first, this one 15-minute candle. So from a bull candle, after that, here I can see that is our closing point, and the next candle opens somewhere here, and after that, given a pullback, again goes up. So exactly we enter before it's take a rally. All right, we catch before take a rally. So let me show you where we enter. So in a small time frame, we need a chart pattern. So if you don't know about the chart pattern, you just go to my uh, website. This is Alpha Analyst. So here I already wrote about the chart pattern, and go to indicator, and go to chart pattern. What is the chart pattern? Chart pattern somewhere here. This is all chart pattern are here. You can say triangle, bullish, or X, Y, Z. Chart pattern are available. A triangle. All right, all chart pattern. Reversal Ireland, head and shoulder, uh, like that. Okay. So I'll show you exactly what type of pattern they form here. So once I point my cursor somewhere here, I can see first candle near 0.5 standard deviation, but I'm not able to enter here. I haven't seen any pattern somewhere there, so I left it. So next candle also broke this area. Have you seen? So broke this area, so I missed that opportunity. And the next here I can see after breaking this 0.5 standard deviation, price goes up. Now scenario is coming like that. Price goes up, pull back, goes up, pull back, goes up, pull back, and then goes up, pull back, and goes up from this area. So in this area, what we have seen first, they broke 0.5 standard deviation. What was the level? Four, sorry, 43300. Okay, let me show you my standard deviation. So 0.5 upper side 43300, right? Okay, let me show you now. Here I can see. So after that, after breaking this point 5 standard deviation, which is the level of 43,300, so price goes up a little bit. I was waiting and a pullback. So finally, we have seen this is a W pattern. Have you seen W pattern? So once they're forming a W pattern, so we draw a horizon, trend line. So trend line broke somewhere here, right? So what is our anti rule? So once first we need a bullish candle. So in that case, here you can see when they are forming a W pattern in a 1 minute chart, first candle we have seen bullish candle. So after that, next candle somewhere here, price pull back a little bit. Have you seen? Let me show you, then it comes to know. Okay, here I can see this is the pullback. Have you seen? First candle from a bullish. After that, somewhere here, that was a 1 minute chart. They are forming a W pattern, and after that, little bit pullback, and exactly we entered. So let me show you. In that case, here you can see 11 a.m. 11 a.m. Little bit pullback somewhere here, little bit pullback, price open somewhere there, and exactly we entered, and our target was near 1 standard deviation. Have you seen? This is a 1 standard deviation line. What was that 1 standard deviation line? 1 SD line. That was 43459. Am I right? Let me check it. 1 standard deviation. Yeah, 43459. Have you seen? Exactly hit that level. So that was opening price we put on there, and automatically they are calculating where price will go. All right. So now you can see our price exactly hit this level. We booked our profit. Have you seen? So next the price drop again. So where price drop? So let me show you. Price drop hit this level. We booked, and the next here you can see. Let me zoom a little bit. Okay, perfect. And the price again pull back somewhere here, and the next bullish candle forming. So where bullish candle? That was a bullish candle lower point. Have you seen 1 minute chart? My cursor is somewhere there, and exactly here they are detecting. Have you seen? All right. So after that, here you can see what we have seen here. First, let me connect this point, this point, this point, and the price broke in this area, but there are no pattern was forming. So finally they form. Let me use this one, then it comes to know. Yeah, so first here I can see this point, and finally broke this point. All right, so another here, left shoulder, head, left shoulder. All right, so I connected these 2 points. So later I connected these 2 points and another point, this higher point. I connected somewhere like that. This is a neckline. So finally, price broke this neckline and given a pullback, and exactly we enter somewhere here, and again we booked profit here. All right, in this area. So left shoulder, head, right shoulder, trend line broke, and the neckline broke. Price broke this area, pull back, and again we hit somewhere there and booked our profit somewhere here. Okay, so later here I can see how they're behaving. Next, hit that level, and finally price hit, pull back, break this level, again pull back, price goes, pull back, goes, pull back. So what we have seen here. So another pattern we have seen. Let me show you. So this is the higher point, like that. Just a minute. And that is the lower point. This is the lower point. All right. So that was our range. So price break this level, pull back, goes up. We was looking for a confirmation pullback, goes up, pullback, goes up, pullback, and finally broke this area. Have you seen this area? So we enter exactly this level, and our target was near 1.5 standard deviation. Where is the 1.5 standard deviation? This level. Let me show you. Okay. 1.5 standard deviation 43164. Let me show you. 1.5 standard deviation. What is the level? Okay. 43618. 43168. Have you seen 43168? 618. 43618. Let me modify this one. 43668. Okay. So next we enter where? In this area. So after breaking this area, price goes again and pull back, goes up, pull back, goes exactly hit. So where we add some position, let me show you here. Okay, let me zoom a little bit. And at first, you can see price goes and then suddenly drop again, goes up, pull back, and that was our supporting level. We add some position and that place SL below this level, and price hit this area. That was 1.5 SD standard deviation. So it's a purely mathematically calculated. All right. Okay. So why we enter? Now you can see first here I can see Let me zoom a little bit. Okay. All right. So first here you can see why we enter in this area. So first we booked profit from a bearish candle and another bullish confirmation candle broke this area, and finally they form a bullish candle and some pullback above this area. So we just wait. So after giving a pullback, we was waiting to break this area that was sideways zone. So finally broke and we enter. Why we enter? These pattern are forming above one standard deviation. So we are expecting that price will hit 1.5 standard deviation. So price hit this 1.5 standard deviation level. All right, we booked the profit somewhere here. So it's a purely mathematically calculation. All right. So you can see what type of pattern are forming. So all I already wrote. Okay, so here I can see in this area they form a W pattern. Have you seen? And they broke this neckline, so that is where we enter. First entry point, and the second entry point is somewhere here. Second entry point. This is head and shoulder pattern, and this one W pattern, and this is a trend. Range breakout. So everything I wrote here. So let me show you first what pattern they are forming. Just a minute. Cup and handle, no. Okay, no. That was reversal pattern, no. Waist pattern, no. Head and shoulder. This one head and shoulder pattern, where head and shoulder pattern form in this area. Have you seen? Head and shoulder pattern. So that is the perfect. And the next step, first pattern was what pattern? Double top, yeah, double bottom, whatever you say, W pattern, whatever you can say. Round pattern, flat pattern, double top. Where is the double bottom? Double top or opposite, this is the double bottom pattern. Have you seen this one? Double bottom pattern are forming. That was our entry point. And another almost you can see rectangle pattern. Last one is rectangle. This one W pattern is the head and inverted head and shoulder pattern, and this one rectangle pattern. This rectangle pattern. Have you seen? Rectangle pattern they are forming. According to this pattern, we enter in this market. Have you seen? This is a sideways market, but here target is different. But here we are using standard deviation, all right? Standard deviation pattern. Sorry, standard deviation to find out the target price. All right. Okay, let's see for tomorrow. Let me show you. Sorry, just a minute. Let me check it. Daily time frame. Daily time frame price create an all-time high and a strong bullish candle. So if price open a gap up, so definitely we'll continue by using standard deviation. So I hope you enjoyed this video. If you like this video, please like and subscribe, and thanks for giving your valuable time.